G'day YouTube, Max right here, and we've got a big video for you today. We're going to go through the good, the bad, and the ugly for the cryptocurrency market in October. There's lots of things coming up, and I'm going to tell you, overall, there is lots of good stuff happening inside of the crypto space. There's just this one boogeyman outside of the Bitcoin space and crypto space, so we're going to look at that right now. Let's start off with the Bitcoin dominance here, and there's plenty to learn from this chart. So this is the chart that tells us where are we going to get our biggest bang for our buck. Are we going to get it in Bitcoin or are we going to get it in an altcoin? And so I really like, now furthermore, long-term subscribers of this channel will know, I have long said we cannot take off on the next big leg of Bitcoin until Bitcoin leaves the altcoins behind, meaning Bitcoin dominance has to go up. The concept is that money, institutional money is flowing into Bitcoin, and if these speculators are taking, they're like a hole in the bucket, the wealth is leaking out, going into NFTs, DeFis, all these other things, and it's like a leak in the bucket that's stopping Bitcoin going forward. Now, I am not a Bitcoin maximalist at all. I have altcoins. I often call it, I've called it when it's altcoin season, I say now is the time to get into altcoins. I'm just telling you, this happens, it's happened in previous cycles. There's a little, the gains from the small caps are big as a percentage, and then there's people who are just eager as hell to just jump into it. And they jump into it too soon and it stalls Bitcoin. But the deal is, Bitcoin goes first, then altcoins go, and those gains will be bigger. And then there's a crash for both, okay? But Bitcoin has to go first. Nothing, we're not gonna have the big movements. We're not gonna have the 100, 200,000 Bitcoin unless Bitcoin is about to go, unless the hole in the bucket is plugged, right? That's my prediction. And what we see here is we have a very, very beautiful W pattern being created here on the Bitcoin dominance chart. Now, we have entered this zone of resistance that we messed around with for a long time. And, we just flashed above it, came back down. I wouldn't be surprised if we come back down to this trend line here before we head up and ultimately break through. What I really want to see is breaking through this purple resistance line, getting back up here. And then the big magic moment, I think, will happen around about here when we break the neckline of this W. So so we're all clear on the W. Here is the W, right? And so the question becomes, when we break that neckline of that W, you can see it's almost a triple top here. You see the bottom was a classic double bottom, like as perfect a double bottom as you can see, a really beautiful W. This is a really clean chart. Well, until I messed it up, but it's a really, really clean price action, which is, again, is just telling you a lot. And when we break the neckline of this W, I think we could see a fast move. Look how fast this move was, the breakdown from Bitcoin dominance from 60 down to 40. Let's go back a little bit. The rise up was a little slower, but the rise down was very, very quick, okay? What I want to see here is when we break this neckline, I think breaking this resistance, that's the first step we've got to do. Breaking this is going to be the next step we do. And then I think we'll move up very, very quickly. Now the question becomes, how high do we move up? Well, with W patterns, you take the neckline down to the bottom of the Ws. In this case, there's a double bottom. We grab that height and we take it to when it breaks the neckline. So here is where it breaks the neckline, yes. We're going to put it over here in the future. And we're going to go somewhere around here, and we can see we get very, very close to this trend line. So if we go continue, we're expecting this W to come up somewhere up here, and wouldn't it be just perfect if the price target from the breakout of the W was the price target from this line here. I hope I'm not blocking the screen. I'm not. We've got 1, 2, 3, 4, 5, 6. Times this line was used as resistance. I will say I don't expect Bitcoin dominance to go all the way back up to 70s. That is not my prediction. I think around about here is where I'll be looking to get back into altcoins, okay? And remember, just because Bitcoin dominance is going up does not mean the price of altcoins is falling. It just means that the price of Bitcoin is outperforming. It's moving ahead faster than the alts. But when it turns around and when altcoin season starts again, it will happen fast. It'll happen fast. The altcoins will go big. And the reason it usually happens very, very fast for two reasons. The price of Bitcoin is falling at the same time the price of altcoins is going up. So that's why typically we come down this in a very, very steep movement. Very, very steep movement. And I wouldn't be surprised if we come all the way back down here for a triple bottom and maybe even a little bit more on this Bitcoin dominance chart into the future. Nope, don't want that. So just for that, probably most likely my most likely situation here is that after we top out here, we're probably going to come back down here in the Bitcoin dominance. Okay, but so for right now, we're looking for step one, get through this resistance. Step two, break the neckline. And then I think we'll see Bitcoin move very, very quickly, most likely up to this downward sloping trend line, this blue line right here. Okay, then it will be altcoin season. And you'll have a pretty short window. Just all predictions, guys. I'm just guessing. I don't know what's going to happen. I'm just guessing. My prediction is that there'll be a pretty short window here where Bitcoin will peak, start to come down, but the altcoins will keep going up. So if you anticipate that and get in here, you get an extra leg of the bull market because you jump from the Bitcoins have outperformed to here, you sell some of your Bitcoin, get into altcoins, and then Bitcoin crashes, altcoins take off, do another leg, you get another big bump, sometimes 2, 3, 4x. It's crazy what can happen in those manias. And then very shortly lived, I'm talking weeks, not months, weeks. I think in 2017, we had, there was around about a month between Bitcoin's peak and Ethereum's peak. We'll go back in just like 3-4 months ago, like May, June. I think Bitcoin peaked. It peaked at 64,000, I think, in April, 65,000 in April. I think it peaked at like 62,000 in like April, May area. But then I think the altcoins peaked about June. So when is this peak here? This is January. No, not that peak. It was this one, March. So I think, okay, so apparently March is where the Bitcoin price really started to fall. So I'm just guessing this from the Bitcoin dominance chart. But so you usually get around about 2 to 4 weeks. So I'm not going to be pushing my luck. I think I'll probably take like 10 days of it and get the hell out of everything and be in cash for a little bit. So just want you guys to know that is my most likely scenario happening right now. Most likely scenario happening with the Bitcoin chart. Okay, and again, just supporting this, just to look at it a different way, I really want to show this. This is crypto bubbles. So in the week, compared to Bitcoin, there are only 6 altcoins. Only 6 altcoins that outperform Bitcoin. That means 94 altcoins underperform Bitcoin in the last week. And the same is true, I believe, for the month. We've got 3, we've got 7. 7 altcoins outperformed. 93 altcoins underperform Bitcoin of the top 100 coins. Okay? Very, very good information to know, which is great. Which just supports this, what we can see in the charts already. Bitcoin dominance for the last week and month has been on the rise. Go Bitcoin. We want to see you break the resistance. We want to see you break the neckline of the W. And then I think we'll head all the way up here to the target is like 60-ish. Bitcoin dominance of 60-ish. Okay? All right. Next concept I want to share with you is it looks like we have a little bit of a return to the mid-month peaks. So for those of you who don't remember, I spoke about it a lot back at the beginning of the year. When the Bitcoin price was going up very, very quickly, you'll notice, first of all, what these are. These vertical blue lines here, these represent the last Friday of the month. The last Friday of the month is when futures expire. It doesn't really matter what happens. What happens is the trend is clear. When Bitcoin's price is rising, it usually finds a local peak in the middle of those last Fridays of the month, and very close, within a few days of the last Friday of the month, it hits a bottom, hits a bottom, hits a bottom, hits a bottom. Whereas the middle of the month hit the highs, 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 highs. Now that was less true, and even goes so far as to say not true, during the time when the price of Bitcoin was going down and sideways. But we are now back into an uptrend, and I want you to notice this, the prevalence of this again. Middle of the month, high. Last Friday of the month, low. Middle of the month, high. Wouldn't be surprised if we come down here. By the way, there's 2 here this month I want you to pay attention to. So I think futures expire on the 4th Friday of the month. And then, what is it? The other thing, some other derivative expires on the last Friday of the month. It happens to be that those 2 are 2 different Fridays this month. Usually they're the same Friday. So the 4th Friday and the last Friday is usually the same, but this month happens to have 5 Fridays. and so it's a little bit separated. Usually it's the first of those Fridays. It's the fourth Friday that is where the bottom is, not that one, but they both show a little bit of correlation between that. So I want you guys to be aware of it, okay? I wouldn't FOMO in this minute because maybe there's just some good reasons to suggest that we might just be chilling out for a couple of weeks. And then I'd say here in November, we shoot up, Bitcoin dominance goes up, we break through here, get all-time highs, very, very exciting. Next, I want to share with you some on-chain analysis. So this is from Will Clemente, not sure how he says his name. I love it. 19-year-old lead insights analyst. Good for him. Crushing life over there. Well, so he's an on-chain analyst, and he's prepared this chart for us. And this is the long-term holders supply shock ratio. Now, what this ratio means is how many Bitcoins are held in wallets by people who tend to just not sell them, or at least haven't sold them, haven't moved any of their coins for the last, I think it's 6 months, could be 3 months, could be 9 months, I forget what the number is. But there's some definition there of a long-term holder. They just haven't sold any of their coins in like 6 months or 9 months or whatever that ratio is, compared to people who are trading and buying and selling and using the coins all the time, right? So as the wealth flows into the hands of the long-term holders, that causes a supply shock, meaning if a new participant comes in, there's just so much held by people who are not willing to sell that they have to bid up the price big time and get people into the market to create supply. So that's what this ratio tells us. And you can see here, whenever we get up into this band, and so the ratio is 4-to-1. By a ratio of 4-to-1, the Bitcoins are held in long-term holders' hands and they do not sell often, right? It takes a big price jump to convince them to be willing to sell some of their supply, okay? That's what this chart is saying. So when that gets up here high, you'll see that's this moment here. Well, that led to a 6-month giant bull run back here in 2017, right? So there was in 2017, this was the precursor to a 6-month epic price rise where Bitcoin goes from 500, no, what is it? We're at 400, so it's like 300 because it's logarithmic. Let's call it $300 up to 20,000, right? Epic, epic move. Let's see what this one. This one, when it happened up here, we went from something in the order of 3,000 all the way up to 15,000. Looks deceiving because it's a logarithmic chart, right? But this is 3,000 to 15,000. So as we get up here, the movements look smaller, but please don't let that trick you. That's a logarithmic chart we're talking about. So we get up here this time, what do? And we move from approximately, I think this is going to be something in the order of 15,000 all the way up to 60,000, right? All of those moves are in what, the triples and more, right? So we are back here now. Is this foretelling the next 6 months that, you know, we're going to have this big epic price rise from something in the order of 50 to something in the order of 150 to 200,000 that could play out over the next several months? Well, the answer is yes. That is what this is telling us, right? That is 100% what this is telling us. So pretty much on-chain analysis is telling us some very, very good things about the Bitcoin price is happening over the next few months. I've talked previously about Q4, why we're expecting Q4. A lot of people are expecting Q4. That has me scared a little bit. I don't like it when everyone's thinking the same thing. But anyway, we've got a lot of people thinking that Q4 is going to be where it's at. I've been predicting that for a long time. All throughout the summer, I was telling you that's the time to accumulate. We're heading into Q4. Q4 is where it's going to be really, really exciting. I'm going to have to talk, maybe I'll make it in this video, maybe I'll do it in the next video. It depends on the time. But I want to talk about how this cycle might be different. So stay tuned. If you're not subscribed yet, make sure you subscribe. I'll talk to you about how this cycle might be a little bit different here, right, with regards to Q4. And let's see, there was one other thing I wanted to share with you. Oh yes, I said the good, the bad, and the ugly. So we've got the good and we've got the better. On-chain analysis, price action, Bitcoin dominance, Q4, all the things are lining up for epic, epic, epic Bitcoin action. Oh, sorry, still one more good thing, potential. There's a potential good thing. It's actually on Will's deal right here. The next 2 weeks should be very interesting. The SEC has promised that they, or maybe it's just set up in the rules from when you apply, you need an answer. There are 5 ETFs that the SEC has to give an answer to. You're either approved or denied by these dates. They all happen over the next like 3 weeks, right? And these are the bookies' odds on getting approved. So on being the first to get approved. So this one's a 2-to-1, even money, right? Is that how? I grew up in Australia. We do our odds slightly differently than the way they do it in America. In Australia, this means you put down $1, you get 2 back, so it's even money. In some countries, I mean, this you put down the 1, you get the 2 plus the 1 you put in initially. So you put in 1, you get 3-to-1. So in Australia, this is even money. I think that means the same thing here. 9-to-1, 20-to-1, 5-to-1, 50-to-1. So yeah, between all of these, according to the bookmakers, it is more likely than not that we are going to get an ETF in the next 3 weeks, which I think will send Bitcoin's price soaring. Pardon me. So if that were to happen, I don't think an even money call is a fair assessment of the situation. And so I'm not on board with this. I think it's a little less likely than I think it still might happen, but it's a little less likely than even money, in my opinion. But if this was to happen in the next 3 weeks, I think you would see Bitcoin go ballistic very, very quickly. So very, very interesting. I agree with Will. Next 2 weeks should be very, very interesting. What if all these are rejected? What would that mean to the price? Yeah, I think it might suffer a little bit. I think maybe a lot of the price action is building up to this moment. People are hoping that one of these is going to get approved. If they all get rejected, people might be like, "Oh, I'll go and find something else to do with my money until there's another chance for Bitcoin to get in." Okay, now all of that's the good, that's the better. Now let me tell you the bad and the ugly. It's got nothing to do with Bitcoin. It's the specter of what's happening outside of the cryptocurrency markets. I draw your attention to this headline on Zero Hedge. This was yesterday. The article is actually today, Tuesday, October 12th, the year of our COVID 1.8, otherwise known as 2021. So it's a disastrous day. All hell breaks loose in China's bond market. I'm just actually going to read this to you because I think it's important enough. Let me see if I can. Yep, that's working. That's working. Okay, great. Easier for you guys to read too. Okay. The US bond market may be closed, but it was fully open in China, and locals took advantage of that fact to do one thing: sell. In the aftermath of the catastrophic property sales, and China's worst case scenario is now in play, China's property firms' bonds were hit with another wrecking ball on Monday as Evergrande was set to miss its third round of offshore bond payments in as many weeks, and rival Modern Land became the latest scrambling to delay headlines. Now I've told you about this many, many times. There is the contagion that we have now. This was the big thing in 2008. There was a stock market bubble pops in Iceland. That triggers some particular, I think it was a bank in England that had massive exposure to the Iceland stock market for whatever reason, I don't know. And but several months later, it has to say, hey, we're insolvent because they had to write down the value of all these stocks on the Iceland stock market. Something else happened after that. There was a contagion. There was some bank over here in the USA, and eventually something big enough took down Lehman Brothers. Lehman Brothers threatened to take down the whole kit and caboodle, right? That took, I think, somewhere between 6 and 12 months to play out. It was that the contagion takes time, right? And it's dominoes, but there's a time delay to it. So next thing I'll leave that topic there. I'll come back to it in a second. Next thing I want you to understand is you will always, always, always get told by the talking heads on TV that everything is fine, don't panic, stay in the market. That is absolutely universally true. Just some unbelievable and crazy ones over the last few years, like Ben Bernanke, 2008. The housing market is rock solid. There's absolutely nothing to see here. There's no problems whatsoever. A few months later, arse drops out of the real estate market. And not only that, a year later, once all the data starts to come out, you can see that actually the housing market crash had started months before Bernanke made that statement. And the recession officially started months before Bernanke made that statement. It had already started happening. He knew it, and he was blatantly lying to you. In the 80s, the Mexican peso devalued. One day, the president of Mexico is on TV. There is no problems with the currency. We are not going to devalue. Everything is perfectly fine. Meanwhile, off camera, he's selling all of his Mexican pesos. The following morning, Mexican peso is devalued. Anyone who took his advice 24 hours before got a massive haircut. It's very important you understand. You will never ever know it's coming based on what the talking heads on TV will tell you. You will also never ever know what happens by the guys on YouTube and the truth tellers, because they're saying the sky's always falling. Because everything, like, they know you don't have to trust them. But the problem is we don't have the information. We claim to, some of us do, we think we do, we have opinions, we know something's coming. Do we know when? No, because we're not insiders. We do not know, and we do not have the information. What I can tell you is this looks scary. This is scary. Of course everything's saying it's not a big deal. But the property market collapsing in China, what does that mean? How many mortgages are not being paid? How many bonds do not get paid? How many other banks in other countries have exposure to the Chinese real estate market, to the Chinese bond market, to the Chinese mortgage market, right? Then it triggers. Maybe it's a Japanese bank, maybe it's a Thai bank, maybe it's something else. Then all of a sudden it's Deutsche Bank who had exposure to all of it. Then all of a sudden it's an insurance company, Lloyd's of London, who had something. And just there's this cascade that happens over months. And you're always told it's always rosy, stay in the markets, don't worry. And it is garbage. So unfortunately, we're in this situation where we just don't know. Maybe this is the next Lehman Brothers event. Maybe it's not. I don't know. But I do know it's definitely a possibility, and the odds are going up all the time. We were told this was a non-event, and this is definitely not a non-event. It doesn't just end there. So now we've got Modern Land. That's one of Evergrande's biggest rivals. They're the latest, trying to say, hey, we have to delay our deadlines, right? Then it triggers outside of that. Other signs of stress included. This is Modern Land asking investors to push back by 3 months a $250 million bond payment due on October 5th, in part to avoid any potential payment default. I've got news for you. If you owe money on a certain date and you don't pay it, it is a default. You're asking the people that you owe the money to push it back to avoid a default. It's very crystal clear. The language is obvious. They do not have the money. Maybe they can get it in 3 months. Maybe they cannot. Here's the insane part. This was not expected. What are you talking about? This was not expected. Like, it happened to your rival. Why would you not expect it to happen to you? Right? This makes no sense. What happened? This was not expected, and Modern Land's April bond plunged more than 50%. So if you were holding that bond on that day, you took a 50% haircut, right? That means the market is expecting not to get paid. Who is this bond owed to? What insurance company, what bank, what other company now needs to chop that in half on their balance sheet? What happens to them now? Are they now technically insolvent? We don't know. We don't know. Because all these bonds were like AAA rated, right? So it's okay. Companies do things because they're AAA rated. This is like Chinese real estate market. It's healthy. It's wonderful. It's fine. You know, this is the biggest company in the land. Everything's okay. So it's AAA rated. You're allowed to have 90% of your treasuries allowed to be held in this, and boom, it drops by 50%. How many companies are now insolvent? When do we find out? Probably the end of the next quarter. All right. What else happens? Was there something? There was another sentence I wanted to read. No, was it there? No, there's another very important thing here. Elsewhere, this real estate proposed paying just 5% of principal on a note due October 15th and swapping the debts for bonds due to 2023. Same thing. They can't pay the bonds. They're trying to get another bond. They're trying to borrow from Peter to pay Paul. Give me another bond so I can pay off that bond. But they don't have the money to pay the bond back, right? Where else? There was another sentence that was critically important. Now I can't find it. I'm going to hit pause here. Yeah, I found it. Here it is. But while Evergrande's default is now just semantics, and 1 week after Fantasia shocked bondholders with a surprise announcement it too would stuff creditors, just weeks after it had said its liquidity is fine. Yes, this is Ben Bernanke. There is no problem with the real estate market. This is the president of Mexico. We are not going to devalue. Just weeks after they said liquidity is fine, people just ate it, right? So I think it plunged here. I don't know why the 7.5% comes here, but it says it came from par to 74 cents. That's a 26% haircut. So dominoes are falling. Evergrande was the epicenter, but now it's cascading out, right? I don't know if it takes down the whole economy, a worldwide economy in a 2008 scenario. I don't know. But the odds are rising big time. So what do? We've got everything about Bitcoin screaming, going forward, an amazing time, explosion in price, possible ETF, you name it, on-chain analysis, so much good stuff happening in the crypto space. And we've also got, I'll show you that. We've also got really good signs of decoupling. Really good signs of decoupling. So this is the Bitcoin price here. So this is the daily. So let's count them, right? We've had, in the last kind of like 12 days, we've had like 4 red ones, and they weren't very big red ones. Let's go and check out the dollar index. This normally is inverted. Over the last sort of similar time frame, the dollar is getting stronger. The dollar has been getting stronger. Typically, if Bitcoin goes up, or in the markets go up, the dollar goes weaker. So the dollar is strengthening at the same time that Bitcoin is strengthening. Let's look at the Dow Jones. Over that period, Dow Jones at 10 days, Dow Jones is coming down. And we have now put in a fourth, 1, 2, 3, 4, a fourth lower high on this trend line, right? Dow Jones is coming down, dollar's going up. Typically, you would see Bitcoin do similar things. Bitcoin should go down with the stock market to some degree. That has not happened. Is this the beginning of decoupling? Very, very, very early days to say. I would suggest not. Hopefully it is, but I don't think so. If the markets fall in a significant way, and I would, once again, bringing you back to, I think this line of support here, which is 94.5, is really important for the dollar. If we break through this 94.5 in the dollar strength, I think you will see this move with the Dow Jones crash. Right, we're going to follow this trend line down, and we could fall very sharply down here, down into the, who knows, 30,000s, way down here, right? I've drawn this trend line here a while back, apparently. It could be something to do with that coming all the way down here to 31,000 for the Dow Jones, or lower, who knows? But there's plenty of reasons to be cautious. So how do we weigh all this up? How do we balance it, right? Everything about the Bitcoin world screams very exciting, good, go. And the good news is the payoff should be relatively quick. We're talking 1, 2, 3, 4 months, and we should see, if the market survives, the broader market, the macro market, if it survives, we're in a place where we can maybe double, triple our money in the next 2, 3, 4 months. That's an amazing return, right? That's what it's gearing up for. The liquid supply ratio, the long-term holders illiquid supply shock ratio, something like that. That is just screaming buy. If we can survive, if the macro market survives for 3, 4 months, Bitcoin's going to go ballistic, in my opinion, over that period of time. But if the markets crash 20, 30, 40%, you're going to see Bitcoin get hit hard. It's not going to survive that. However, in the recovery, then the months and years later, the response to a crisis like that is going to be very, very obvious. The government is going to print trillions upon trillions of dollars, probably more than $10 trillion in one 12-month period, right? And that will send the price of Bitcoin absolutely soaring. So you might get hurt for a little bit. You might see a drawdown of 30%, 40%, 50%, 70% with Bitcoin in that scenario. But my prediction is that within 12 to 24 months, Bitcoin will be soaring. Over a horizon of about 5 years, it will actually speed up the price of Bitcoin's acceleration. We'll hit $1 million a coin faster if that crash happens. But if you're 100% invested in crypto, and you have to sell crypto to survive after that 60% drawdown, well, now you're a fool. You should have kept something on the sidelines so that you can survive for that period of time, and you don't have to sell Bitcoin when it goes low. In fact, it would be nice to even buy a little bit. But I understand the temptation is stick a whole bunch of Bitcoin, because as long as the market survives 3, 4 months. I think it's reasonable. No guarantees, of course, but reasonable to expect 3 to 4x on your crypto. That FOMO market kicks in, hitting $200,000 Bitcoin, very, very achievable. Very, very achievable in the next few months. So guys, I hope this has been helpful. I feel like a little bit of a broken record. I've been saying the same thing for the last few weeks now, but everything in the charts is telling me that, everything about Bitcoin is amazing right now. Everything about macro is the worst we've seen since COVID, March 2020. So these are the things we have to balance up. Hope this is helpful. Hope you have a plan. Your situation is going to be different, but it's more about portfolio management right now because we just don't know. If the markets hold, I think Bitcoin skyrockets. If the markets crash, Bitcoin crashes hard, then skyrockets. Okay, guys, take care. If this is interesting, if you like the content, do me a favor, go ahead, smash that like button, hit the subscribe button, and let me know in the comments, what do you think is most likely to happen? Is the macro market going to survive for about 3 to 4 months more, giving Bitcoin a time to go epic, to hit those $200,000 mark, or is it going to get cut short by a macro collapse that collapses the Bitcoin market as well? Let me know in the comments below, and I'll see you guys soon. Take care.